Okay, Assalamualaikum warahmatullahi wabarakatuh. Next, we'll present Islamic financial institution. Okay, we go through definition of financial institution. Okay, financial institution is a firm or a company, or we can call it a bank, engaged in the financial and monetary transaction industry of a corporation engaged in the financial and monetary transaction business, such as deposit, loans, investment, and currency exchange. Okay, it is imperative for policymakers to control and monitor banks and financial institutions. Okay, this is the definition about the conventional financial institution. Okay, next we go to for Islamic financial institution. Okay, as we can see, the definition is quite same, but as I have highlighted, which is the differences is the Islamic financial institution, they operating in compliance with the Sharia. Okay, for the Islamic financial institution, if they need to from the financial institution and they want to convert to the Islamic financial institution, they need Sharia boards. Okay, what is Sharia boards? Sharia board is uh, and one of the department from the Islamic institution, which is they will advise about their advice, which is their expertise in Sharia law. Okay, for the Sharia board, they should have more than one competent scholar, which is the function for the Sharia boards is certifies Sharia compliant Islamic Islamic financial product and services, advise them about conformity with their product and services, and lastly, reviewing the operation of their financial institution. Okay, you can see the Sharia board, which is they will advise, they will monitoring the Islamic financial institution when they make a new product or they want to produce a product. It is they need to refer to Sharia board, which is the product or the services comply to the Sharia or not. Okay. Next we go to the differences between conventional and Islamic financial. Okay, first, Islamic banks are based on principle of divine law, or we can call it Sharia law, which is from Quran and Sunnah. But for the conventional banks are based on fully manned principles. Okay, which is it is made it by a man. Okay. Next, profit are shared between the bank and depositor according to a pre-agreed ratio, and this profit are not guaranteed. Which is we are not guaranteed that they will get a high profit or not, which is will give the our customer or our depositor a hope. Okay, but for the conventional financial institution, depositor are guaranteed a predetermined rate of return, which is they use interest, so they show to their depositor, although they active or not, they need to pay the interest, which is the interest will make them get more money. Okay, the for the Islamic financial institution, the for the interest or riba or usually it is 100% prohibited. Okay, next, for Islamic financial institution, they aims at maximizing profit but subject to Sharia and legislative restriction. For the conventional, the differences is they still want at maximizing profit, but only legislative restrictions only. Okay, next for the Islamic financial institution partner, Participants participate in partnership and joint venture with customer, share in profit and assume losses incurred by our customer. But for the conventional financial institution, they lend money with predetermined rate of return. Okay. Lastly, for the differences between conventional Islamic financial institution, the relationship of an Islamic bank with its client is that of partner, investor, and entrepreneur, and buyer and the seller. But for the relationship for the conventional financial institution, the relationship of the bank with its client is only creditors and debtors. Okay.
Next, we move to Islamic Commercial Bank. Islamic Commercial Bank play a role as the middleman. It gets source of fund from depositors who have surplus, and then it gives financing for those who need money. Both activities of getting fund or source and delivering the financing are delivered through the many of products. Islamic Commercial Bank accept deposit using contract of Islamic banks finance. Deficit unit using contracts such as security contracts. Islamic Commercial Bank offer many products include take deposit, give financing, buy and sell financial instrument, investment, and others. Deposit product in Islamic Commercial Bank. There are two types of deposit products in Islamic Commercial Bank. The first one is Islamic Deposit Account. The Islamic Deposit Account guarantee up to 250k ringgit and it is flexible. As example of the Islamic Deposit Account is the current account. Example, Bank Islam Malaysia Berhad Wadiah Yad Pemanah Saving Account, and also have term deposit. Example, Bank Islam Malaysia Berhad Term Deposit Tawarruk. The Sharia contract used in Islamic Deposit Account is Wadiah, Mudarabah, and Qard. Number two, second type of Islamic deposit product is Islamic Investment Account. The return is based on asset performance. Maturity and conditions are agreed in the beginning. Islamic contract used in Islamic Investment Account are Musyarakah, Mudarabah. In the Mudarabah, bank play a role as the fund manager and the depositor is as the capital provider. And the third one is Wakalah. Two types of Islamic investment account, restricted or unrestricted investment account. Restricted or unrestricted investment account, the difference is on the flexibility. The flexibility means there are specified instruments or not, have maturity or not. The example of restricted investment account is the Bank Islam Malaysia Berhad Sakinah Investment Account I, and for the unrestricted investment account is the General Investment I account.
If I continue my part, Islamic investment in banking. Islamic asset management refers to professional investment management of Sharia-compliant securities, such as sukuk and other securities. The net effect of this investment approach is generating competitive investment returns and encouraging ethical business practice. Islamic principle Sharia principle prohibits investment in conventional bonds and other debt securities that generate interest income. Islamic principle discourage debt in general. Interest payment on debt owed are viewed as usually exploitative of the debtors and are thus prohibited haram. What is investment in Islamic bank? The bank makes investment in various ways authorized by the Islamic principle in order to earn a profit when money is deposited with the Islamic bank. In order to earn income for wealth maximization, not only bank but also person or organization may use Islamic models of investment. Because of when Islamic bank is investing, they are using like they are not owing you money, but they are investing you. If resource are used in manufacturing processes are for trading purpose to buy fixed and current assets, then it can be considered as a real investment. Because when Islamic bank wants to buy real assets, it will invest you. The establishment of plant or the purchase of manufacturing purpose for raw materials, machinery are examples in tangible assets. The product in Islamic investment, mudaraba. The term mudaraba refers to a form of business contract which one part brings capital and the other personal efforts or the or the or the labor. The proportionate share in profits is determined by mutual agreement, but the loss, if any, is borne only by the owner of the capital, in which case the entrepreneur gets nothing in his labor. The financier is known as Rabb al-Mal and the entrepreneur is Mudarrib. As financing technique adopted by Islamic bank, it is in it is in contract with all the capital provided by the Islamic bank, while the business is managed by the other part. The profit shared by pre-agreed ratios and the loss, if any, unless caused by negligence or violation of term of contract by the Mudarrib, is borne by the Islamic bank. The bank passes on this loss to the depositors. Thank you.
Takaful. Takaful is a type of Islamic insurance where the member contribute the money into a pool system to guarantee each other against loss or damage. Or in other words, Takaful insurance is based on Sharia or Islamic religion law, which is explain how individuals are responsible to cooperate and protect each other. Takaful policy also cover their health, life and general insurance needs. Any claims made by participants are paid out of the Takaful fund. Takaful is a form of mutual insurance based on the principle of cooperative sharing, mutual responsibility, mutual protection, and solidarity among groups of participants. It is a mutual risk transfer arrangement which both parties will share the profit and loss equally. The basic objective of Takaful is to pay for a defined loss from a defined fund. Each member of the group pools effort to support the needs. It means mutual helps among the groups. For the next slide, we will talk about the concept of Takaful. The concept of Takaful can be divided into three types, which is Mudarabah, Tabarruk, and Wakalah. For the first concept of Takaful is Mudarabah. Mudarabah can be defined as a commercial profit sharing contract between a supplier or provider of funds and an entrepreneur conducting the business. Mudarabah is a share agreement between two parties, which is Sahibul Mal, or we know as participant, and Al-Mudari, we know as Takaful operator. This Takaful operator who do not have a capital, but they have the expertise to conduct their business. All profit from this venture will be shared between the two parties based on the agree ratio. For example, 15-15 or 16-14 or whatever is mutually agreed upon. For the second concept of takaful is tabarruk, or we know as a gift or donation. Tabarruk is a participant who agree to release all or part of a donation or contribution to enable it to fulfill the responsibility of helping each other to guaranteeing each other. In a takaful contract, tabarruk is a certain amount of sincere donations made by the participant for a specific purpose, as stated in the agreement on the spirit of brotherhoods and mutual cooperation. These funds will be used to help members in needs. The third of the concept of takaful is wakalah. The term wakalah in Arabic means representative or agency. Therefore, under the agency structure, wakalah is a mutually agreed agency relationship between two parties to carry out certain business activities. Two parties, which is an agent and participant. The main task an agent is to manage the participants' involvement in the various takaful products provided by the operator. In return for the service provided by the agency, the operator is allowed to charge under the agreement. Fees or service fees are paid from takaful contribution funds donated by participants. Under this concept, management expense can be charged to the takaful funds as an advance payment. For this slide, we will show you about the difference between takaful and conventional insurance. For the takaful, they based on mutual cooperation, and for the conventional insurance, they based on commercial factor only. For the second point, for the takaful, subject to Sharia laws and government's laws, but in conventional insurance, subject to government's laws only. And the other point is in takaful plans holder and shareholders' capital can only be invested in Sharia compliant investment funds, but in the conventional insurance, capital of the premium for conventional insurance is invested in funds and investment channels that are not necessarily Sharia compliant. In the takaful, any transaction or any action must free from riba, gharar and maisir, but in the conventional insurance, there has an element of interest, gambling and uncertainty. For the last point is in takaful, risks are shared and distributed among takaful participants who agree to jointly assume risk. But in the conventional insurance, risk is transferred and passed on from individuals to conventional insurance provider.
Definition: Reinsurance is the process by which an entity, which is reinsurer, takes all or part of the risk covered under a policy issued by the insurance company in consideration of premium payment. In other words, it is a form of insurance coverage for insurance companies. Function of reinsurance: Reinsurance is for insurance operators who transfer their risk to a larger insurance operator. The purpose of the reinsurance method is to reduce the risk exposure to the insurance operator. Takaful is not same as a reinsurance, but takaful is takaful coverage for takaful operator, which is to take a policy for takaful policy. Takaful operator also insure themselves with a larger takaful operator such as Basri Takaful, Munish Takaful, Swiss Takaful, MNRB Takaful Berhad, which operate based on the same concept and principle as TAKAFUL operator. The purpose is to reduce the risk in the event of the situation where many policyholders demand compensation due to major disasters such as tsunamis and hurricanes that hurt many people. Reinsurance flows. Reinsurance is basically it's between insurance companies and another insurance companies. Policyholder will transfer their risk to the insurance company, and then the insurance company will transfer their risk that they take from the policyholder to another insurance companies to reduce the risk exposure.
Islamic fund management is an option for Muslim investors. This offers a chance for Muslims to invest in accordance with the Sharia. This sort of fund is basically similar to the conventional investing, except it complies with the Sharia rule and regulation. The terms of Sharia compliance fund means joint pool where the investors contribute their money for the purpose of investment to earn halal profit to strict conformity with the precept of Sharia. Product of Islamic fund management. Islamic capital market provides Islamic equity market, Islamic finance sukuk. The Islamic equity market covers Sharia compliant share of companies that do not engage in activities that are considered haram in Islam. These including features involving gambling, bulk food businesses, alcohol, wine, tobacco, cigarette, and related product companies are prohibited in Islam. Islamic funds are managed in conformity with the Sharia principle. Investment made in instruments that earn profit in ways that are deemed halal. Functions of Islamic fund. Functions of Islamic fund management is responsible of implementing fund investment strategy and managing trade activities. Their offices mutual fund or portion management analyze, conduct research, and make important investment decisions. And there are three main functions of Islamic fund. First one is investment fund, unit trust fund, and exchange trade fund. Investment fund. The terms of Sharia compliance fund means joint pool wherein the investors contribute their money to purpose for investing to earn halal profit, strict conformity with the precept of Sharia. The concept of Islamic mutual fund has its root in Sharika, unit trust. An Islamic unit trust or mutual fund is a type of equity fund that collects funds from the investors' pool them of investment in stock, bond, or other investment product. Exchange trade fund. An exchange trade fund is an open and end index trading unit trust. That fund consists of group of stock that can be listed and traded on the stock exchange like single stock. The principal objective of an exchange trade fund is to track or replicate the performance of benchmark index.